Hello friends. We all experience moments in life when, despite our hard work and abilities, we fail to achieve the success we dream of. Why does this happen? Are we making mistakes, or is our mindset holding us back? This question becomes even more significant when we step into the world of trading. Trading is not just about buying and selling stocks, it's a game of the mind and emotions. It's a battle not against others but against ourselves. If we can master our emotions and channel our thinking in the right direction, success will come seeking us. But this is no easy feat. To understand this struggle, traders worldwide consider Trading in the Zone a milestone book. This book isn't just for traders but for anyone who wants to conquer their mental battles. In the trading world, every step tests you with fear and greed. When you buy a stock, there's fear it might plummet. When profits start rolling in, greed whispers, maybe there's more to gain. These emotions often push us toward wrong decisions. The author, Mark Douglas, teaches us that to understand the market, we must first understand ourselves. Trading is a mental game requiring discipline, consistency, and a detached mindset, in neither fearing losses nor clinging to profits. In this video, you'll learn how to control fear and greed to enter the zone in trading, where every decision is thoughtful, you learn from mistakes, and you view the market without bias. This book teaches trading strategies but, more importantly, teaches you about yourself. Its lessons can bring revolutionary changes not just in trading but in life. So, watch the video till the end because this journey will help you understand the market steps and see yourself from a new perspective. If you like the video, don't forget to like, share, and subscribe. Let us know in the comments what challenges you face in trading. Let's learn, evolve, and write a new success story. Chapter 1: The Path to Success. Mark Douglas explains that success in the stock market rests on three pillars: fundamental analysis, technical analysis, and, most crucially, mental analysis. Most traders focus on fundamental analysis to determine a stock's true value and technical analysis to predict market movements. While these are vital, they are incomplete without mental analysis. There's often a gap between what's happening in the market and what traders perceive. To succeed, traders must work on their mindset and mental state. Many traders, despite profits, remain dissatisfied because they focus only on market ups and downs, ignoring their inner thoughts. They feel they could have earned more, which creates unnecessary pressure. There are two types of traders: those who consistently profit and those who repeatedly lose. The difference lies not in intelligence or effort but in mental analysis. Successful traders incorporate mental analysis into their systems, knowing how much to earn, how much risk to take, and when to step back. They don't trade on superstition or emotions, they rely on risk management. Their mindset is focused, disciplined, and confident sets them apart. Even professionals like doctors, lawyers, or engineers lose money in the market, not due to a lack of knowledge but because they haven't developed trading psychology. Success in the market means taking risks, but not recklessly. Accepting and cutting losses at the right time is the greatest trading skill. When mastered, this skill helps you rise above market fears. Trading psychology teaches us to decide how much loss we're prepared for in each trade. Profit and loss are constant in the market, no situation is permanent. Accepting this truth allows us to trade with calmness and confidence. Many lose consistently because they trade emotionally, expecting every trade to be profitably, a flawed mindset. Success comes from controlling emotions and trading with a plan. Risk feels scary because we see it as fear, not opportunity. Like stage fright before a speech, practice reduces fear. Similarly, consistent risk management in trading diminishes market fears. Mental analysis teaches us to recognize emotions, trade with a plan, and accept both profits and losses. Successful traders know how much they can lose and when to stop, avoiding reckless trading. The ultimate goal isn't always profit but managing losses and controlling risk. Master this, and you'll face market fluctuations with confidence. Mark Douglas emphasizes that accepting risk is the greatest skill. Once learned, Your journey to success in the stock market begins, as only those who are mentally strong and emotionally disciplined win. Chapter 2: The Greed and Dangers of the Trading Business. Mark Douglas explains why people are drawn to trading for the wrong reasons. We love the feeling of freedom and living on our terms, but in trading, this freedom can lead to trouble. The trading world feels rule-free, opening endless possibilities, yet most traders lose money due to an undeveloped mental framework. Maintaining mental balance during adverse trades is challenging, but a skilled trader remains calm and disciplined. Douglas compares traders to curious children who find joy in everything. Traders should approach each trade as a learning opportunity, not a source of stress. Discipline is critical to avoid losses, as the market doesn't teach mental stability. There's no guarantee today's price will match tomorrow's. Before entering a trade, decide how much risk you are willing to take. This mindset forms the foundation of a responsible trader. Douglas identifies 3 main trading challenges. Lack of rules. Unlike other activities, trading requires you to create your own rules. Avoiding responsibility. You must own both profits and losses, not blame the market or luck. Addiction to rewards. Overtrading due to greed can harm mental and financial health. Success requires the right mindset. Trading isn't just about money, it's a journey teaching self-control and discipline. The real challenge isn't the market but your own thinking. Stay in control of your emotions, or the market will defeat you. Adapt to the market's constant changes, and you'll not only enjoy trading but also profit. Chapter 3: Accepting Responsibility. Douglas views trading as a profound responsibility. Accepting responsibility for wins and losses is the first step to success, akin to a mother caring for a sick child with dedication. Every outcome, good or bad, is your own. Recognizing this makes you a skilled trader. Trading is an art, and mastering it requires shouldering responsibility. Fear is the biggest obstacle. Overcoming fear reduces mistakes. Thinking like a successful trader and embracing continuous learning are essential. Avoid trading driven by hopes or emotions. A skilled trader stays grounded, even during winning streaks, avoiding overconfidence. Losses are a part of trading, but the key is learning from them, not blaming the market. Fear and greed are new traders' worst enemies. Fear causes missed opportunities, while greed leads to poor trades. Overconfidence after consistent wins often results in rule-breaking and losses. Only 10% of traders consistently profit, while 30 to 40% always lose due to failure to understand market dynamics. Another 40 to 50% earn but lack the skill to sustain profits. Some profitable traders lose everything in one big loss. Success lies in balancing confidence and patience. The market moves independently, and traders must adapt to its rhythm. Blaming the market hinders growth. Accepting responsibility unlocks learning. Douglas concludes that fighting the market is fighting yourself. Evading responsibility blocks the path to success. Chapter 4: The State of Mental Consistency. Douglas explains that consistency is a mental state rooted in fundamental trading strategies. It sharpens skills and offers a new perspective. Trading with your own money feels different from trading someone else's due to the weight of responsibility. Trading is both an art and a mindset. Mental stability is crucial, as trading is a journey of ups and downs. It's not always a struggle, but the mind often perceives the market as against us. This perception traps traders in a cycle of losses due to internal fears and insecurities, not the market itself. Accepting the market's uncertainty is key. Fear clouds judgment, making risk-taking feel unnatural. Douglas stresses preparing for every scenario and embracing the market's unpredictable nature. Mental stability and consistency are vital during turbulent times. Traders must take responsibility for decisions, adopt new mindsets, and adapt strategies to market changes. A calm, balanced mind handles uncertainty better, discarding false assumptions. Douglas emphasizes that the market delivers only what you're mentally prepared for, so maintain clear, positive beliefs. Chapter 5: Dynamics and perception. Success in trading isn't just about technical knowledge but also mindset and perceptions. Trading in the zone aims to dispel harmful misconceptions, enhancing your trading experience. Market data is neutral. It's the trader's mindset that interprets it as useful or not. Success or failure depends on your perspective. Successful traders don't fear the market, they see risks as opportunities. Douglas urges removing harmful mental bugs through a simple, positive mindset to seize market opportunities. The goal is to seek opportunities, not fall into analytical traps. A chart remains the same, but your perspective makes it unique. Change your perception to spot hidden opportunities. Focus on current data, not past experiences or future speculations. Fear and insecurity hinder traders, often due to recent losses clouding judgment. Success lies in keeping perceptions dynamic, adapting to the market's daily changes. A flexible, positive mindset unlocks the market's potential. Trading is a mental game, and winning requires aligning your perception with the market's ever-changing reality. Chapter 6: The Market's Attitude. Douglas emphasizes understanding the market's behavior. A trader's risk-taking ability is influenced by recent trades, as a success boosts confidence, while losses breed fear. Successful traders remain balanced, unaffected by past results. They focus on current opportunities, not future worries or past experiences, staying in the zone. Their discipline prevents self-doubt or internal conflict from derailing their plans. Identifying opportunities is a skill that can be developed. Warren Buffett advises avoiding unsolvable problems, while Charlie Munger stresses avoiding poor decisions. Clear thinking and the right perspective are crucial. The market is boundless, behaving unpredictably. Profits come from buying low and selling high, or vice versa. Douglas highlights 3 common mistakes: not defining risk, failing to minimize losses, not booking profits at the right time. Price movements stem from bulls, buyers, and bears, sellers, but recognizing the forces behind them is key. Adopting a mindset that anything is possible prepares you to seize opportunities with an open, flexible approach. Chapter 7: The Other Side of Trading. A game of probabilities. Trading shares superficial similarities with gambling, but their structures differ. Gambling relies on luck, while trading involves systematically identifying and managing probabilities. Both provide information, but trading requires studying patterns and subtle signals, not just predicting outcomes. Success depends on perceptions, knowledge, and perspective. Studying indicators deeply and recognizing subtle probabilities is crucial. Perfect timing and knowing when to enter and exit is a vital skill. Indicators aren't always accurate, but your mindset must be. Consistent mental clarity underpins decisions. Successful traders focus on the present, accept uncertainty, and manage risk. They control what they can, accepting outcomes without regret. Fear and greed are enemies. Greed drives reckless trades, while fear blocks opportunities. Analyzing components and outcomes objectively, learning from mistakes without letting them dominate, is key. Chapter 8: Working with your interests. Douglas highlights how interests drive success. They fuel dedication and skill. Technical analysis helps understand market fluctuations, but it's not enough. Overcoming fear and misconceptions is vital to seize opportunities. Every market moment is unique, and embracing the here and now is critical. Fear rises from viewing the market mathematically, assuming past patterns repeat. Accepting the market's uncertainty is essential. Douglas outlines 5 market truths. Unknown forces are always at play. Embrace unpredictability. You don't need to predict the future. Focus on strategy and skills. Trade outcomes depend on diverse, unpredictable factors. Success hinges on inner belief and discipline. Every market moment is unique. Mental balance is key. Accepting risk as a challenge builds confidence, enabling you to enter the zone where you're attuned to market signals. Chapter 9: The Nature of Belief. Beliefs shape trading success. To generate new interests and possibilities, adapt to market dynamics. Inner conflict or distraction hinders progress. Staying present, not dwelling on past or future, is crucial. Understanding beliefs strengthens your mindset, fostering new psychological frameworks for confident trading. Beliefs stem from personal experiences and are expressed through actions and words. They drive motivation, giving life and work direction. Deep interest and faith in trading enhance experiences. Regularly review your trading approach, ensuring energy, capability, and time align with goals. A structured mental and physical approach, gained through self-awareness and addressing weaknesses, is vital. Chapter 10: The Impact of Beliefs on Trading. Beliefs profoundly influence trading. Success depends on understanding yourself and your beliefs, which guide thoughts, decisions, and outcomes. Overconfidence or excessive enthusiasm can lead to mistakes. Beliefs, rooted in experiences, shape behavior unconsciously. Analyzing and evaluating beliefs is critical to ensure decisions align with reality. Societal views on money can create doubt, but clarity and honesty with your values mitigate this. Strong, clear beliefs provide stability in tough times. Adapting beliefs to changing needs is challenging but possible, enhancing trading and life outcomes. Balancing positive and negative thoughts builds a strong mental foundation, making decisions easier and fostering discipline and clarity. Chapter 11: The Trader's Mindset. Trading is challenging due to its inherent uncertainty, making it both tough and thrilling. Success requires evolving your mindset beyond technical knowledge. Douglas outlines 3 stages. Mechanical stage: build confidence in an uncertain environment by trusting your system and analyzing the market consistently. Self-discipline stage: evaluate and correct mistakes, controlling sensitivity to market events and addressing fears. Intuitive stage: trade instinctively, like a martial artist with a black belt, relying on experience and intuition for seamless decisions. Focus on timely entries, stop losses, and booking profits, accepting trading's uncertainty. Like a casino, trading requires strategy and mental stability. A 3-to-1 reward-to-risk ratio is ideal. Fear undermines confidence, so trade fearlessly with passion. Trading in the zone means making focused, confident decisions, handling uncertainty effectively. Trading in the zone promises to transform every trader's mindset. Mark Douglas shows that the biggest enemy isn't the market or strategy but our own psychology. If you found this video helpful, like, share, and subscribe to Bookpedia. Hit the bell icon for notifications. Tell us your trading challenges in the comments. Until next time, stay happy, keep learning, and move toward your goals. Thank you.